How to gain an edge trading earnings. My name is Don Kaufman, and you are watching a TheoTrade presentation. Risk disclosure, we're not a financial advisors nor a broker dealer. I have done my time in the brokerage world. How many people have been around long enough to remember me in the brokerage, kind of the brokerage arena? So I spent quite some time in the brokerage world. I know just by looking at some of the names that are tuned in tonight, I actually know quite a number of you over the years. We've actually run into one another. I was on a big speaking circuit for about 10 to 15 years as well. So I've traveled around pretty extensively, working with Thinkorswim, TD Ameritrade. Of course, I know all the brokers out there, you know, whether it's E-Trade. By the way, E-Trade's Morgan Stanley now, TD Ameritrade's Charles Schwab. I know everybody over at Charles Schwab. Yeah, you know, pretty much a brokerage firm. It's a very, very small world. With that, we throw up a copyright disclaimer. It's mine, it's not yours. Listen, the reason I love to throw this up here right off the bat, first of all, TheoTrade, okay? We are based in Scottsdale, Arizona. Most of the time, I am based in Scottsdale, Arizona. Well, for the foreseeable future, until things kind of die down a little bit, maybe in the U.S., I'm based right now in St. Croix in the U.S. Virgin Islands. But if you need to get a hold of me, okay, if you need to get a hold of me, right here, I am support@theotrade.com. Just put Don in the heading. And the one thing I really make a big deal about this, listen, you need to get a hold of me, okay? Get a hold of me. Shoot me an email, support@theotrade.com. So we use what's termed a common inbox. It's because we, you know, have thousands and thousands of clientele. Somebody might be like, hey, how do I access the website versus, you know, a really complex trading question? We answer trade-related questions. We're here to answer your emails. And again, I never shy away from an email over there, so please understand that. By the way, I love the first question that came in. You guys can ask questions. Am I on a small island because of a pandemic or the election? Okay. I don't know. Take your pick. Actually, for the last almost 10 years, it's kind of a fun story. I'll start with this. But for the last 10 years, we have had a few friends that have lived down here in St. Croix that are traders that, you know, I grew up around traders, which we'll talk about here momentarily. And they've said for like the last 10 years, man, you got to come down here. These are your kind of people. You know, we can sit, we can talk, you know, have a couple beers at night here and there. And it's just an entire neighborhood of traders. Actually, one of the biggest advocates of modern monetary theory lives down the street. Next to me is one of the biggest, you know, traders ever. Right down the street is also hedge fund manager, manages $5 billion out of a little home on the beach. It's not really a little home, but actually he used to own this house over here. So it's a pretty tight-knit community of traders, you know, living out here in St. Croix in the U.S. Virgin Islands. And that's how I came here, because my kids did not go back to school. So we packed them up. I have, again, wife and 3 kids, packed them up and headed down here. And I'll be down here, you know, until things kind of die down. That's why I'm here, but this is why you are here tonight. Listen, tonight, by the end of the webcast, you got to walk away with something definitive. I always say this whenever I do one of these webcasts in the evening, because I don't want you tuned in, zoned out, okay? Listen, I want you tuned in, okay, to pick up definitive knowledge. And this is what I'm going to really drill into you tonight. And again, I am going to be talking extensively tonight, okay, around earnings trades, which I'm going to show you the exact trades that I have on. Literally, they're on tonight for the earnings that happened tonight in Apple, okay, in Twitter. eBay was yesterday, Starbucks, right? I know everybody's like, what about Google? What about Amazon? Yeah, we'll look at those as well, okay? But, right, we're going to discover expected move and how to use it around earnings. Number 2, okay, how to learn efficient the market really is. Like, you got to learn about efficiency of the markets and how it can actually benefit you as a retail trader and use this advantageous resource. It's literally in all aspects of your investments, retirement accounts, cash accounts, futures trading, okay? You got to learn about efficiency of the marketplace. Number 3, learn that a weekly strategy can take very minimal risk and produce pretty astonishing returns surrounding predictable, or what we term manipulated movements. And of course, number 4, discover a unique method you can use surrounding earnings announcements. And that's exactly it. By the way, I'm going to show you trades that I have on, okay, that I put on before the close that will, hit P and L, profit and loss, by tomorrow morning. And we'll show you that a little bit. Listen, our free gift to you. Stay with me right until the end of the webcast. There is an earnings expected move indicator that I use, okay, kind of incessantly, and I'm going to use that indicator a bit this evening. As such, we feel that it was important enough to provide to you. If you stay with me right until the end of the webcast, we will provide you this indicator. And again, I'm going to show you exactly what the indicator is here momentarily. Okay. Again, we call it an earnings expected move indicator, and it provides expectations of stock price movement surrounding earnings announcements. And it's $497. We give it to you because it's just like, I don't want you to feel like misled, like, oh, I watched this whole webcast and I can't do what he's doing because I don't have this particular indicator. Well, you are going to have this indicator. All right. The one that I'm actually going to provide to you, I like this. Okay, I like this one, and reason I like it, it's labels on the top of your chart, and what the labels indicate, and I'll say just chart labels provide invaluable data on how much a stock is expected to move based on current, okay, market implied volatility. So for the most part, what it says is, here's Facebook, okay, and Facebook was expected to move, for instance, $16. All right, so it's expected to move about 16 bucks. All right, and again, it shows, today's close, and this is, by the way, this is a screenshot. It's not fair to, this is a screenshot actually taken a little earlier in the day, so bear with me. I had to take a screenshot a little earlier in the day before the close, but that was right around the expectation of movement, and that's what these labels do. And again, it's data that it's already pulling the right data for you, so you can evaluate what is anticipated coming into the earnings announcement. Does that make sense to everybody? And again, this is the kind of stuff that we're going to be talking a little bit about tonight. So if you're brand new and are just like, don't deer in the headlights on me right now, but if you are a little bit of deer in the headlights, it's okay. Okay, so we're gonna walk you through this a little bit here. All right, let's get into it. Some housekeeping here. Listen, tonight this is skill set, so you got to pay attention, or you're going to lose me early on. I am going to again, we have a pretty good size group on tonight. I'm in terms of numbers here. Yeah, actually, we have a lot more people than I probably anticipated this evening. And I say that because I'm going to move at a pretty good clip tonight. I hope that's okay with everybody. That all right? By the way, I love what somebody said. Okay, what direction's the stock going to move? How about if I tell you this? Why does it matter? Why does it matter what direction the stock moves? I'm going to show you that tonight. People are infatuated with direction. The strategy we're going to talk about tonight, okay, you're not going to have to worry too much about that. I love that. You gave me the deer in the headlights. Okay, do they have deer on the island? They got chickens on the island. They're running around everywhere, man. There's chickens everywhere on this island. So, so no deer in the headlights. It's just chicken in the headlight over here. Listen, I'm going to throw a lot at you tonight. Shut the door, turn off Skype, chat, whatever else might be distracting you. Definitely close Facebook. Facebook is worthless. Okay, I'm not the only one that believes so. Apparently tonight it's not doing that well. Kick out the kids. Definitely kick out the kids. Okay, grandkids, however, the dog can stay. Listen, all I'm saying, you took the time to be here, and I'm going to throw a lot at you. Focus on being here. This is a little bit about me. So just some quick background. As I said, as I kick this off tonight, I've been around the markets quite some time. So I started trading in the late 90s, and pretty much right out of college I started trading. But I grew up around trading. I had family that were market makers, and always had an interest in it. And I had an uncle that was one of the biggest, traders ever. I mean, he owned a trading firm. He owned 500 seats around the world. If you guys are from Chicago or New York, I'm sure you're familiar with the firm. It was called O'Connor and Associates. That firm went from one seat in Chicago. He owned over 500 seats by 7 years after he launched the firm. So he launched the firm in 76. Literally 7 years later, he owned over 500 seats around the world. He sold the firm to the Swiss bank in the 1990s, became UBS. It's a little bit of like how I got interested in the business. And I kind of ended up, backwards into the business. 3 weeks out of college, I got a phone call. Hey, you want to come to Chicago? It was one of my cousins, and I never left. So I started trading in Chicago, and shortly thereafter, about 18 months after that, some guys that I just kind of knew, not well, but knew them from the trading floor, and they said, "Hey, you're young, we're starting a brokerage firm, and while we start this firm, before it's even launched, we want to get you involved." And I said, Sure, I don't know any better. That sounds wonderful to me." At the time, I was 24 years old, so I joined a firm called Thinkorswim. Lo and behold, I built the education division of Thinkorswim, and we went on to take the company public in 2007, and I remained on the executive team in 2007. We went on to be acquired by TD Ameritrade in 2009. The deal was valued just under $700 million. It was a great run. I actually stayed on. I stayed on until 2015, and people always ask why I left in 2015. I had a 5-year lockup on my contract. So when Thinkorswim was purchased, the deal actually closed just before 2010. So I had to stay for 5 years. That was actually part of the deal. So I stayed for 5 years, and I actually ran the education division of TD Ameritrade. And there's, at the time, it was 7 million clients for a period of just over 5 years. And in that time, in running education, okay, the most important thing, I had access to the largest retail order flow in the entire industry. That's why I always try to tell people, like, you don't want to really know why I'm here, because I had access to your order flow for 15 years. We studied everything that was done in client order flow, and we had the largest options order flow in the world coming through TD Ameritrade. We got to see what everybody did, and it was a huge, not only lesson, but it's a huge portion of what I still do today. I mean, listen, what you're going to learn here this evening comes from watching literally billions of dollars in other people's mistakes, and really with the knowledge of not just what works best for traders, but what works best for retail traders. I mean, we could look at everything that traders at TD Ameritrade did. And I don't mean like, oh, let's look at Mike's account. Oh, let's look at, John's account. And it had nothing to do with that. We would actually look at big data. We would look at literally hundreds of thousands of accounts. Did you do an iron condor? Did you sell a covered call? And people ask, do you make money? Do you lose money? We would evaluate everything in every way, shape, or form. And that's a little bit about my background and kind of what brought me, here. And one of the reasons we launched TheoTrade, which I'll talk about a little bit tonight too. This is some media that we still do. I actually threw this one in here because it was the last time that I was in Chicago. This is actually live on TD Ameritrade TV. This is also live on TD Ameritrade TV. It's this is me back in Scottsdale, Arizona, but kind of remoting in. This is a shot on CNBC. It's probably one of the more memorable, I guess, CNBC appearances, because it's myself against Kevin O'Leary, who's the King Shark. So that's a little background on me. Let's get rolling into this. Price movement defined. So we're going to talk a little bit about price, okay? Price action here, but much more importantly, a little bit about earnings. And again, whatever presentation maybe that you have seen, okay? Whatever presentation maybe you've seen, this is going to differ dramatically from anything you've ever seen before. And I'm going to let you know right now, okay? You don't believe it, but you're about to see some stuff that's just a vast departure from, okay, what you hear about earnings trades and so forth. I'm going to tell you right up front, okay? What you're going to learn tonight is a skill set. So you better be willing to learn something, because I know everybody today, they want instant coffee, instant tea. They want to be spoon fed, okay? You're going to get some incredibly valuable data tonight. But when I say it's not what you think, okay? You're not going to have to worry about if the stock goes up or if the stock goes down. And you're going to see that here momentarily, okay? But again, we want you to latch on. If you're brand new and you've never ever heard me speak before, by the way, who here is brand new and never actually heard me before? Anybody here brand new? First time that you've ever been to TheoTrade? Come on, people. Admitting it is the first step this evening, okay? Who here is brand new? Nobody ever wants to come in here, right? So everybody here is familiar with everybody? Only like 2 people? First time. We got a first timer, okay? What I want you to try to grasp this evening is big, broad strokes, big concepts. Like, don't get caught up, down in the weeds tonight. All right. Just when I say big concepts. So first, price movement defined. As stocks move, traders and investors alike, they measure movements, okay, after the fact in what is termed historical volatility. Meaning, like what? Historical volatility. The annualized standard deviation of past stock price movement. You want fries with that? It's kind of, well, effectively, historical volatility, okay, tells you the rate at which the product is actually moving, right? It's historical volatility is like driving 100 miles an hour, okay, looking through the rear view mirror. Does that make sense to everybody? Like that's I think the best analogy. Like here's Amazon, okay? Amazon. And this, by the way, I took the screenshot, well, today, all right? Amazon. And by the way, one other thing here, screenshot this, screenshot that. People, we're going to look at a live trading application tonight too. Hope that's all right with everybody, because we are absolutely going to look at a live trading application. I'm just clicking around right now because I don't want to stay on a PowerPoint all night. It's just, for me, it's not dynamic, it's not interesting, and I'm going to let you guys get involved that are here live with me. So listen, earnings come at historically like low volatilities. Like if you look back at this and what you're looking at here, this is historical volatility, right? It's backward looking at volatility. And the volatility right now, it's kind of low versus where it has been even the last couple of weeks. But the thing is, earnings are imminent. And when earnings come, what's going to happen? All right? What's going to happen when earnings come? We're going to move, baby. We're going to move. Historical volatility in this context is kind of useless. All right? What we need isn't to look at history, like historical volatility. It's history, baby. Okay? What we need to look at is going to be a market of what I term foresight. Looking back is great, provides insight, right? But the thing is, like, you're looking back at all this data and you're trying to assess where you're going by looking through the rear view mirror. If we could only produce, okay, foresight in the markets. Well, there is foresight in the markets. It's called options markets. That's one thing. So tonight, I'm going to say, enter the options markets. Listen, I'm not here this evening to force options down your throat. And I want everybody to know that. We talk about options markets. Why do we talk about options markets? Because the option market puts a price tag out to the future. That's what you're about to learn here momentarily. When I talk about like big concepts, most people don't get what an option really is. Like, well, when I ask what an option is, they're like, it's a right or it's an obligation. Okay, but what is an option? Well, it's a thing that I can buy, and if the stock moves big, I can make a bunch of money. And I'm like, no, I need to know what it is. All right? Most view options as the ability to like take a shot. Let's just do this. Be bullish, be bearish, not have to trade the stock. There's just so much more going on. We view options as placing a price tag on risk and future moves within a given stock. And you're like, huh? Okay, well, that's what we're going to talk about for a second. When I say grasp big, broad strokes of logic, those of you that actually know options, how many people here know a little bit about options? Okay, how many people here know some options? I know there's already somebody in here talking about like iron condors. Don't worry, we're getting there. It's not a good strategy right now. All right, so a couple of people know about options. Right now, put down your guard on what you think you know about options, because what we're going to look at here, all right, is that options are your future. They are your future. Ask yourself the question. It doesn't matter what option you're looking at. It's trading for $3. Why is it trading for $3? Like, it's a completely, like, that question is, I guess, very open-ended. Why is an option trading for $3? First of all, somebody's willing to pay that for it, right? There's going to be a buyer and a seller. For the most part, though, the real answer of why is an option trading for $3, okay? Why is that option trading for $3? Because somebody believes that stock, whatever the stock is capable of moving, okay, $3 or more. Think about that. What an option really is It's kind of this like bet that you're placing. I think we can move $3. The other person says, I don't think we can move $3. And you're like, huh, that's kind of an interesting way of looking at it. People, this is what options are really about. Okay, this is what you need to be looking at options for, not because you think the stock is going to go up or think the stock is going to go down. Options don't have any directional bias. That's the crap that everybody gets like, all like, you turn on CNBC. Oh, what do you think the stock is going to do? Let me tell you about CNBC for a second, and most of the major media networks. When you go on CNBC, the producer, whoever that producer happens to be for the particular show, even tells you what stock you have to talk about. Okay. They don't even ask you, do you have a position in there? You go, so today, Don, you're going to be talking about Apple. And yeah, we're going to do a little bit on Twitter. So get something ready on Twitter. The point I'm trying to make with this is it's just not trading. That has nothing to do with trading. Okay. Why is an option trading for $3? Because somebody thinks it can move more than $3. Somebody thinks it can move less than $3. Okay. That's the kind of stuff we're about to get to. Embedded in options pricing is implied future move of a stock. Right? If we know what to look for in the options marketplace, so if we know what to look for at options, we can determine how far a stock or index can move within a given period of time. Why are you not using this? And that's the one thing that most people like, they don't get that about options. Again, I'm not here to shove options down your throat. I don't care whether you trade them or not. But I am going to tell you this. If you trade stock, to be successful in stock, you must look at the options, okay? You must look at the options because the options are handicapping what's going to happen in the future. They're literally telling you like, Apple is going to move $10. Apple's going to move $10. Apple's going to move $10. And you go, what? I'm screaming at you. Apple's going to move $10. Are you aware of that? You go, well, I set my stop order $5. What's going to happen? Oh, I know. You're going to get stopped out. Why are you not using this? Okay? You need to get in the know of what is termed expected. Okay? Get in the know. You may not know where markets are going, okay, but you can measure how far the markets can move within a given period of time. Normal fluctuation is what we term expected move. We're going to talk a little bit about expected move. All right? What to expect with expected moves. First, okay, I love this. Danger. There's expectations, right? Expected move. It's not, does not, is never going to tell us which way the markets are going to move. I love to say that because there's people already like, is that stock going up? I don't know, okay? And neither do you. That's actually the greatest thing about expected move. I don't know. I like to come on to a presentation. There's almost 1,000 people on tonight. I like to come on to a presentation and tell you this, okay? I don't know where Apple was going to go, but I took a shot and a trade into it today, and it worked. I didn't know which way Twitter was going to go, but I'm going to show you a trade that I did in it, and I lost money in Twitter. Okay, I'm going to show you a trade in Starbucks. That one's going to work. I'm going to show you a trade in eBay. eBay was yesterday. It already worked. Okay, I'm going to show you a couple of trades that I did. Some crap that worked, some crap that didn't. And you're going to find out that direction doesn't matter because you can make enough, okay? You can make enough off of understanding the expected move, all right? So expected move doesn't tell us which way the markets are going to move, but it does tell us the approximate movement of an equity, which is a stock or an index product, is likely to encounter within a defined period of time. So let's get into a little bit of expected moves. And I'm going to try to draw this out for you here and make it just real clean, okay? So listen, if you're brand new, as I said, just kind of grab the concepts, right? Grab some of the concepts. If you take a look, we're just going to call this a stock. And the stock is trading at, by the way, every fictitious stock in my book isn't just a stock. It's called stock, right? And stock is trading at $200. Now, we're not going to own the stock. We never own the stock. We never want to own the stock. We are going to look, and if you've never traded an option, it's fine. We're going to look at what's called a 200 call, and we're all simultaneously going to look at what's termed a 200 put. Now, for those of you who've never traded before, this is a 200 call. Let's talk about the 200 call. What is a 200 call? Okay, 200 call, well, gives you the right to buy the stock at 200. Do I want to buy the stock? No! Then why am I talking about it? Because a 200 call gives me the right to buy the stock. For how long? I don't know. The option could be a day, it could be a week, it could be a month. The option could be good for a year. Let's make this option right here, okay? The option we're going to talk about right here tonight, let's make that good for like 1 day. Let's just put that up here. That crap is good for only 1 day. Earnings, baby! And that 200 call, let's make it worth $3. And the 200 put, you know what? I'm also going to make that worth $3. So if I look at this, I have this 200 call and I have a 200 put, and add it up, okay? This one's going to cost me $3 and this one's going to cost me $3 if I were to buy both. By the way, I don't want to buy both, but if I were going to buy both, what would it cost me? Okay, we're getting into higher math over here. It would cost me $6. Why would it cost me $6? Because that's just what it is. See, in options, you can buy them or sell them. Just worry about the options though for a second. The 200 call gives me the right to buy the stock at 200. A 200 put gives me the right to what? Sell the stock at 200. So if I go out there and I buy a call, I want the stock to go up. If I buy a put, I want the stock to go down. If I buy both the call and the put, where do I want the stock to go? You guys tell me. If I buy like a call and I buy a put at the same time, okay? The strategy is called a straddle. Where do I want the stock to go? Come on. Either direction, all right? Either direction. At that point, if I buy both, I need it to move up, okay, or down. Minimum, how far do I need the stock to go? I need the stock to at least go, and I'm going to change the color over here so make sure everybody sees this. I need that stock to at least go, okay, out here. I need it to go up $6 or down $6 just to be able to do what? Break even. So I need a $6 move. Listen, if you add the at-the-money call to the at-the-money put, okay, that's actually what we term expected move. It's a cheesy calculation for expected move. What this basically means is options are implying what the stock is going to do. If these options are good for 1 day, the implication here is that this stock is capable of moving. This is what we call EM. What does EM stand for? Expected move. EM equals plus or minus 6. EM equals plus or minus 6. Now, I'm throwing out some pretty wild terms, okay? And the expected move is not plus or minus 3, it's plus or minus 6. You add the call to the put. Always add the call to the put. And we're going to show you that here in a moment. The expected move is $6, so we're supposed to move up $6 or down $6. Okay, time out. Let's just take a time out for a second. We okay at this point? Because the first time people see expected move, they go, okay, so who cares, Don? Who cares, man? So what? We can move up $6 or we can move down $6. By the way, says you, says me? No. Okay, says everybody in the whole industry. Look, pick me a stock. Pick me a stock. Right? Let's look at Apple. Because Apple actually had earnings. When? This evening. Where's Apple trading? Just about 110 in the after hours here. Let's look at Apple. Okay, now I'm going to close up this left sidebar. What you're looking at right now, what you are looking at, first of all, okay, this is what we call the Thinkorswim trading application. If you're not on it, that's fine. Ease up, okay? You don't have to be on the Thinkorswim trading application. Why am I using it? Because I spent, okay, almost 15 years of my life helping build some of the tools that are in Thinkorswim. Has anybody, by the way, how many of you guys are on Thinkorswim? It's okay if you're not, because you could be on Thinkorswim, you could be on Tastyworks, you could be on E-Trade, you could be on, I mean, everybody now has this right here. What is this? Okay, that's my baby. That's one of my babies. It's one of my babies. There are two major things I worked on Thinkorswim. I worked on expected move, but I also worked extensively in the Analyze tab. The Analyze tab and me, we go back a long, long way. Built a lot of that functionality out. Right here, the plus or minus, okay, you know what that is? That's what we term expected move, okay? Right there, that is the expected move. And what that basically means, okay, is that Apple is poised to move up $6 or down $6. You thought I was just pulling a rabbit out of a hat with that example. Not pulling a rabbit out of a hat. I was actually using a little bit of Apple. And granted, I used a $200 stock, but I knew where Apple can move, right? So all we're looking at right now is this expectation of movement. It says it's supposed to move about $6. Let's do another one. Okay. What else you guys got? What other stocks? Anybody? So come on, open for interpretation over here. What other stocks might you want to use? Because we're gonna look back at Apple a couple of times. All right. IBM, seriously, first of all, IBM already had earnings. Okay. And if it already had earnings, the volatility is going to be dead. So IBM between today and tomorrow can only move about $1.50, right? Here, somebody said NVIDIA. NVIDIA, bring it, bring the pain. NVIDIA. Now NVIDIA, okay, if you're unfamiliar with NVIDIA, it's better known as Mr. Toad's Wild Ride. NVIDIA has earnings coming out in the future, but NVIDIA tomorrow is still poised to move up or down about 10 bucks. How about that? Okay. All of that can be derived by expected move. Now stop for a second before we go any further. You need to know more about expected move. Here's what you have to know. All right. This is a $200 stock, and that $200 stock is poised to move up $6 or down $6. It's supposed to stay in that range 68% of the time. Okay. So you're blocked off here and you're blocked off here. Can the stock actually move up here and move down there? Of course it can, but it's supposed to move up or down $6. Remember, expected move equals plus or minus $6. So it's supposed to move up or down $6, stay in that range 68% of the time. But you're going to learn something very, very interesting about this. All right, I love this. Somebody said Snapchat and Tesla, Amazon. Okay, this is good stuff. So this thing's supposed to move this rate 68% of the time. Well, let's find out. Okay, again, expected move and probability. Expected move defines what's termed one standard deviation. Somebody said, where did I pull out the 68%? 68% is one standard deviation. Okay, for the most part. Okay, it's not important right now. If you're not familiar with like standard deviation and what we call sigma, who cares, right? You're like, oh no, I don't know, college statistics I remember, right? High school statistics was even worse. But remember, everything you do in life can fit under one of these, right? In the world, there are really, really good drivers, there are really, really bad drivers, but most of us fit into the meat of the curve. Unless, of course, you're from Los Angeles, in which case you're down here. But if everybody in LA is a bad driver, then most of us fit in 68% of the time, right? Anyway, okay. By the way, nothing we're talking about is naked over here. We're not talking about selling naked, not a chance. All right. So the expected move says there's 68% of the time we're supposed to be inside that range. All right, you guys ready? Okay. Not every trading application has expected move. You can use the at the money straddle as an alternative to expected move. So let me show you this. So this is a stock called Apple. I actually took this screenshot early this morning. The stock moved a little bit, but I wanted to show you. So here's Apple, and the expected move was basically what? $6. Okay. So if you don't have this little calculation that says $6, you can add the at the money put to the at the money call. At the money put to the at the money call. That equals $6. This equals $6. It's just a cheesy way. It's not perfect. Okay, calm down. I'll tell you what. When I first started in this business, which was in the late 90s, and there's still a lot of computers in the late 90s. I mean, nothing obviously like today, but 22 years ago, we didn't have the expected move calculation. Market makers didn't have expected move. So we learned to use the at the money straddle. And in the trading I did, that was fine. It worked out great. The at the money straddle, add the calls to the puts. Because what the options are really doing, here's the thing that people don't get about this business, right? They just don't get this. The option markets. Let me actually go back to a live trading application and let's actually bring up Apple. Okay, because we were just talking about Apple. Right? So Apple is, about $110 stock, about $110 stock. And we're going to look at this example a couple times. I just want to bring something up. This is what we call today's option statistics. Okay. You know what today's option statistics shows you? How many options total traded on Apple? Almost 2 million Apple options traded today. Before what? Before earnings. Okay. Are we okay? Anybody? By the way, this is good for literally what? Most of these 2 million options that traded are good for today. All right? Yes, they are. Almost 2 million contracts traded in options today. It's unbelievable. Like nobody's ever heard of size like that, right? It's huge. Okay? How many billions of dollars are being traded in Apple's earnings? Okay, look at this. See all the volume traded in here? 50,000 contracts. I could open up all the options in here. There are hundreds of thousands of contracts that have traded just in the options that are literally going to expire for tomorrow. This is tomorrow. This is days until last trading day. Well, guess what? Tomorrow's Friday. It's over, baby. It's over, baby. Tomorrow's October 30th, and that option expires on October 30th. Hundreds of thousands. There are billions of dollars being traded in Apple. Okay, so what do I care? I'll tell you exactly why you should care. If billions of dollars, okay, if billions of dollars believe that $6 is supposed to be the move, and if billions of dollars are traded on the fact that a $6 move is implied to happen, what do you think is going to happen? What's the highest probability in occurrence? Okay, probably somewhere around a $6 move, which you're about to see here momentarily. Listen, expected move examples. Let us evaluate, okay, a couple of short duration, weekly expected moves, and make sure you know, okay, what it is that we're here for, what it is that we're looking for, all right? Why expected move matters. Again, we're going to look at a couple of examples, which we've been doing here, and then we'll look at a few more, but why it matters? Because expected move is not based on some line drawn on a chart. It's not, it's not a Fibonacci. And I want to make that clear. This ain't some 618 that I'm pulling out of thin air. Okay? People are like, it's voodoo, man. It isn't. There are billions of dollars. Expected move is based on billions of dollars at risk within a live market that produces astonishing results. Now, okay, now I'm going to start to take you back into it. Does this stuff really work? Let's look at what the expected move on a few stocks happened to be like the day prior to earnings and see if the markets moved as expected. Proof's in the pudding. You know what? We don't even have to look at the prior day. Here's the funny thing. We could look at Twitter. We could look at Apple. We could look at Starbucks. eBay was yesterday, right? Let's look at eBay too. Want to look at eBay? Let's start. Let's do this. Let's do this. Okay. What we're going to do, I'm going to actually work from the bottom up because I want you to see, right, what is occurring in this marketplace. First of all, if we go to eBay, okay, if we go to eBay, what I'm doing right now is I'm going to show you, and again, if you're a little confused, it's all right. Okay, this is going to be as simple and as painless as possible. Here, first thing on the screen that you need to be aware of. Okay, take a look right over here. What does this say the move is supposed to be? You guys tell me. The move is supposed to be what? EM equals plus or minus $4. I'm just rounding it. It's $4. When was this? Okay, this was actually a snapshot taken last night. Today, and again, somebody might be watching this, like later on, but today is October 29th. That's today. In fact, you can see it right here. See, today is October 29th, the exact time, date, everything. The trading day that we're looking at is on the 28th. What I'm saying to you is that eBay, okay, was slated to move up or down $4, right? Did it do it? Did it do it? Well, let's go over to the trade tab. Did it do it? Where did eBay go today? eBay moved $3.97. What was the expected move? $3.97. Huh? How about that? Does it always do that? No, but it's the highest probability of occurrence. Now, if this is the first time you've seen it, you're like, how in the hell did that happen? Okay, I'll tell you exactly how it happened. Few $100 million placed their bets in here on an average price of this stock moving $4. So if you have a few $100 million on either side of the marketplace, okay, the highest probability of the stock being drawn is to the edge of the average of the prices. The average of the prices, expected move is an average. Expected move is an averaging equation. I know, I helped build the expected move equation, okay? And so if you have hundreds of millions of dollars trading, that the stock is supposed to move $4. Some people are buying the $4 move, meaning I want it to move more than $4. Some people are selling the $4 move. I want it to move less than $4. And guess what? The irony is, stock moves what? Exactly $4. We okay? We okay at this point? Because this is where people, the deer in the headlights on me, okay? Or should I say again, I'm on a small island. Don't chicken in a headlight on me, right? It's, if you guys join late, I'm living on an island now. okay, in the middle of the Atlantic, and there's wild chickens everywhere. I think the chicken thing started all the way back in the time of like pirates and shipwrecks. In all seriousness, it actually did. They also have goats all over the island. They used to drop goats off here in case you get shipwrecked. It's a good plan. Okay, you guys want to see another one? Want to see another one? Because that one, it's not fair. All right, I looked at one from yesterday. Let's look at another one. Let's look at Twitter. Okay, Twitter. Why am I looking at Twitter? Well, Twitter had earnings when? Today. So forget looking at like, oh, let's look at yesterday. Let's do this live. Okay, do it live. Here, Twitter closed today at $52. This is where Twitter is currently trading. This is the expectation of movement. Now, let's do some math. Let's do some real rough and dirty math. He's bringing up a calculator. Don't make me do math. So this was a $52 product, 52, let's say 43. So it's 52.43. Everybody cool with this? The expected move is plus or minus. Now, I don't know if it's going up or down. Remember, I don't know if it's going up or down, but now we see that the stock is down. But let's say minus, okay, $7.40, $7 and we'll say 46 cents equals, okay, 44.97. Now, is this perfect? Look, this says 44.97. This, okay, no, Don, the stock is at 43. Yeah, but it's after hours. Give it time. It'll actually rally a little bit back into it in the morning. Close enough for you? It's not half bad. Listen, this is trading, people. This ain't going to be perfect. I just want to show you stuff like, and it shocks people the first time they see this because you're like, how come I not know about this? Let's look at it one more, and then we're going to go on, okay? Let's go over to Apple because Apple is the mother of all products, big and small. Apple was poised to move what? Well, it closed as about $115 stock. It's still moving around right now. Closed about $115 stock. It's down just about $5. What was it slated to move? $5.88, $5.89. Close enough for you? Okay. By the way, if you're not aware and you've never seen this before, okay, you know what this means? Yeah, that means me, okay, because I'm right here. That's a position I have on, all right? I'm about to hit the cover off the ball for tomorrow inside of Apple, and I'm going to show you the trade. That's the thing that you guys got to get, right? You're all worried about like all the wrong things. Just worry about the expected move. These are just some earnings that came out. And by the way, we'll look at Starbucks here in a moment too, all right? Does this expected move, okay, does the knowledge of expected move, I should say, help? Does that help? Does it provide a tradable edge, right? Because you ain't seen nothing yet. Because what you have not seen is what, right? What am I going to do with this, right? All right, so what? We move in predictable ranges via earnings announcements. You get that part. Now show me the money. How do you profit from these moves? Okay, the thing that people have to understand about this business, anybody can look at a chart pattern, anybody. And by the way, people don't look at chart patterns anymore. There's artificial intelligence looking at that stuff, all right? I mean, listen, what can artificial intelligence look at? Everything instantaneously. None of that crap is going to make you money. I could show you expected moves until you're blue in the face. I'll show you. The stock's supposed to move $6. It moves $6. Okay, but you don't know whether the stock is going up or down $6. Okay, how does one profit? You have to take the knowledge of what you just learned and you have to translate it into P&L. Okay, the application of expected move. Our knowledge of expected move started years ago in the SPX. Okay, it has to do with a lot of algorithms and a lot of computerized trading, and it's created a very definitive expected edge in stocks as well. Earnings announcements just bring heavy trading volumes. You saw it. And again, I wanted to show that because people want to know why this stuff works. You know, why it works is important. Like, I can't stand when people go, well, it just works. I'm going to tell you why this crap works. It works because 2 million contracts almost traded here in Apple. You really want to know why it works? Because some no-name stock called Twitter trades almost 500,000 contracts. Nobody ever leaves. Like, Twitter doesn't do anything. It doesn't even trade a lot of volume anymore. Like, look, Twitter, seriously, it doesn't even trade that much volume anymore. Yet a 500,000 option contracts trade because earnings are coming up, right? You want to know why it works? Because no name Starbucks. Starbucks is off the beaten path now. Literally, it's off the beaten path. Nobody even looks at Starbucks anymore. Trades almost 100,000 contracts today. That's why this stuff works. Stocks adhere deeply to expected moves surrounding earnings announcements. But the whole key is this: you have to position yourself around expected moves. So now's the time we got to get down and dirty. How do you position yourself most effectively around these earnings expected moves, but without absorbing large amounts of risk? Okay, that's part of the key over here, is that you can't sit here and absorb a huge amount of risk. Why? See, I don't want to be wrong. Now, I'm going to talk a little bit about, and if you're looking at this, you're like, why does he have a picture of a butterfly? Because we're going to use a butterfly. Okay, because we're going to use a butterfly. And everybody's already asking the right question too. People are like, why are you bearish in Apple? Why are you bullish in this? I'm going to show you right now. Okay, I'm going to show you exactly what we're going to use the butterfly for. By the way, if you've never used a butterfly spread, okay, if you've never used a butterfly spread, have no fear. The butterfly, okay, isn't the key here. The key here is understanding the concept. So I'm going to use Apple in this example because I think it's really viable, right? So AAPL, right, was at $115. Apple's at $115. What was the expected move? Well, let's just round it down because I'm just rounding it to like $5. So we're going to say Apple, the expected move equals plus or minus $5. Expected move is plus or minus $5. So that means Apple is slated to move what? Up here to 120 or down here to 110. What we are going to do in this scenario, okay, is we're going to pick. At this point, right, I just want you to flip a coin. Flip a coin. I'm dead serious on that. Don't tell me what you think the stock is going to do. I want you to flip a coin. Heads, we're going up. Tails, we're going down. Okay? I want your best directional indicator that you own. I want you to flip a coin. Heads, we're going up. Okay? Tails, we're going down. So I flip a coin, and I'm actually going to lay, okay, a butterfly right over here. And what a butterfly is designed to do, it's an option strategy, which you'll see here momentarily. What a butterfly is designed to do is we're going to go out there and we're going to pay a very minimal fee for the possibility of making a lot. What does that mean? Okay, a butterfly may go out and do things like risk $1, okay, for instance, to make $4. So a butterfly might go out there and risk, for instance, 1 to make 3. If you're risking 1 to be able to make 4, or you're risking 1 to be able to make 3, does directional bias matter? And this is where everybody's like, well, yeah, because if I'm right more often, but does it really matter? Does it really, really matter? Because if I go out here and I put this is a bearish one. I could have done a bullish one, right? I did a bearish one. And if I'm right, I'm going to make how much? Okay, I risk $1, I'm going to make 3. Okay, and if I'm wrong, and I'm going to do it like this. Okay, this is going to be tails. This is going to be heads. Okay, heads I'm right, tails I'm wrong. So let's say the first trade I do, I'm right. I make $3. Then the next trade I come out, I'm wrong, I lose $1. The next trade I come out, I'm wrong, I lose $1. The next trade I come out, I'm wrong, I lose $1. Next trade I come out, I'm wrong, I lose $1. Guess what? Down the road, I hit another one. Okay? How many have I actually missed on? I've missed on 1, 2, 3, 4 trades. How many trades have I hit? 1, 2. Am I ahead of the game? Yes. You tell me why directional bias matters, because I'm going to just pound people on this all day long. They don't understand. It's very simply, okay? This is a low risk, high reward trade where you don't have to be right, okay, half the time. You don't have to be right anywhere near half the time, okay? We're going out and we're actually going to take shots and we're going to hit butterflies. Okay. And you're like, well, how often do you really hit one? You want to see because I'm about to show you. I'm going to show you some of my own trades. You just saw a trade I had on an Apple. I don't know if it's going to work out. Crazy stuff could happen between today and tomorrow. What do I care? I have nominal risk on there. Nominal risk. The key to the strategy, okay, is this. The key to the strategy is that when we're wrong, okay, we risk a buck, we risk a buck, we risk a buck, we risk a buck, we make 3. Okay, we risk a buck, we make 3. Now, before I go any further here, okay, let me delete that out for a second. Let's actually go back to a live trading application. Here, Starbucks. Starbucks, okay? I'm not sure if I'm going to make money on this or not. I have a trade on here tonight, okay? And you go, what do you mean you don't know if you're going to make money? I don't know if I'm going to make money. I put the thing on, okay? On this one, all right, what happened? The stock was supposed to move almost $4. It has not. It's only moved down to like 87, 88, like it's somewhere in there, okay? But here's actually the cool thing. This is what we're calling on the dance floor. We are right there because my strategy is centered right here. And guess where we're trading? Right there. I'm actually slightly making money on this trade. You go, well, okay. What'd you even pay for this thing, right? What did I pay for it? So let's go over to my account statement. Okay, I executed this trade in Starbucks today. I paid 50 cents for it. 50 cents. How much can I possibly make on it? $3. So when we talk about risk reward, I was showing you risk a buck to be able to make 3, risk a buck to be able to make 3. This one's risking what? 50 cents to be able to make as much as $3. I'm never going to make $3. I'll risk 50 cents. I could probably make $2 out of this. If we actually open near 85 tomorrow, I'm going to make $2 on this thing. This is huge. This is Starbucks. Am I showing you a wildly profitable trade? Nope. This one's actually right on the fringe. Okay. I'm on the fringe over here. Okay. I hit one though in eBay. I'll show you the eBay trade. And right now, probably the biggest one that I have on. Okay. Look at me in Apple. Look at me in Apple. I am centered right now on Apple. And in Apple, okay, look, people, this is a $4 wide spread. This is a big one. Okay, it's a big one because the $4 wide spread, I need us right at 110, and we're trading right next to 110. That strategy in the morning could be worth as much as $2.50 to $3. Paid about a buck for it. All right, and again, that's exactly what I'm referencing. And if this thing hits 110 on there, it's going to be worth probably closer to $3. Again, we're going to go through trade after trade after trade. Listen, this is why you want to use earnings butterflies. There is a high rate of return surrounding earnings announcements. And again, everybody's like, once again, I already see people coming in here and they're like, but which direction? It didn't really matter as long as you went out and actually placed a couple of different trades. Okay. Am I going to be wrong from time to time? Of course I am. Okay. Of course I am. You want to see? I'm going to be wrong. Let me show you. I like to show people I'm wrong. You know what the irony is? Twitter. Okay. I took a bullish shot on Twitter. I took a bullish shot because the stock was trading at 52. It had a $7 expected move. I'm like, yeah, it's going to go right to 60. Fell flat on my face. Do you think I care? Okay. What did I risk in Twitter? I lost 30 cents. Damn. If I do one contract, I lose $30. If I do 10 contracts, I'm going to lose $300. I lost. Okay. I lost on it. Is that all right? Anybody? Okay. Is it okay to actually take a hit on a trade? Of course it is. This is about number of occurrences. This is about going out and getting a high rate of return surrounding earnings announcements. It's extremely low upfront cost. No one has to go out there. You can have a $2,000 account. You can take shots all day long. You just saw a Twitter trade for $30. Literally a one lot's $30. You never need to buy or sell the stock and provides really consistent earnings trade without having to continually monitor markets or the stock. Like you don't have to sit there. Listen, okay? I'm gonna wake up and I'm gonna look at the marketplace at the open, and I'm probably gonna get out of some of the trades. You know I'm getting out of the Apple trade, and I'm gonna get out of that one wildly profitable. I'm telling you, you need this in your life. Okay? Earning spreads give you the power to trade massive stocks around earnings with just pennies at risk. Okay, just pennies at risk. And by the way, everybody's already strategizing. Like, why don't you do the bullish and bearish trade? Yeah, don't think about that. Don't do it because it doesn't actually increase your odds. There's one thing I'm really strong at. Okay, when I put together coursework for stuff like this, right? I'm a little bit of the math geek, and I'm going to go through and give you the highest probability and possibility with a large number of outcomes. And again, these earning spreads, you're trading, stuff like Amazon or Tesla with a couple of dollars at risk. Here, what our members are saying. Thanks for last night's video on the Apple earnings. I set up the same trade and it looks like max profit tomorrow. Just wanted to send you a big thank you from Dave. Okay? Live earnings trades. Now, this is a variation on the theme. When I say a variation on the theme, here's one that I actually did. And I actually used in-out spreads. Okay, I used a spread on this one. It's the same exact logic. Same logic, people, as the butterfly. But I wanted to show you a little bit of variation in a theme because this one, it's on Snap. Okay, and I happened to do a bullish trade. And every $91 I invested, I got back 198. It's 117% return. This one doesn't have as big of a return on there. Okay, but this was also very early on in the earnings. I was getting a better feel this week for, or I should say last week for some of the earnings. This is a Snap, okay, in-out spread on earnings. Again, what our members are saying, okay, Don, of course, is the driving force, a wealth of knowledge of information. So glad he's doing what he's doing. He's adding a lot to the world of online education. The class today, Unexpected Move, was worth its weight in gold. Please tell him I said so. All the best to you in your position over there. Best, John G. Okay. Here's another one that I hit. Now, this one is Las Vegas Sands. So I'm showing you again, these are trades that I've already been opened and closed. You know what? I say that the proof's in the pudding. I'm showing you a trade right now, okay, that is effectively about a week old. And I don't like doing that. I like to show you trades that are on literally right now. And that's why I showed you the Apple trade. And I'm showing you a losing trade in Twitter. Okay, here, the Las Vegas trade, the Las Vegas Sands trade, it's the same thing as the Twitter trade. The Twitter trade, I lost 30 cents in. Well, here, the Las Vegas Sands trade, I had 29 cents. Every $29 I invested, I got back $100, literally. Okay, you can see the exact date and time. I'm on Eastern time right now. You can see the exact time I opened it, the exact time I closed it. By the way, there's one thing I want you to see over here. There's consistency in when I opened and closed it. The reason for that is this is the time where I'm often live during the trading session, meaning I'm trading this stuff in front of our clientele. So every $29 I invested, I got back 100. It's a 245% return. A timeout. You don't have to do it $29. You could do this $290 to be able to make $1,000. The amount of risk is up to you. But again, it's the strategy that you have to start to understand. Okay. And this is not something I don't want everybody to like run out tomorrow and be like, I'm putting on butterflies all over the place. Okay. It is critical. You have to know exactly what to pay for this thing, when to get into it, when to get out of it. Right. So this is a Las Vegas trade. Next one I want to show you. Okay. And again, this is from like last week. This is a CSX earnings fly. Why CSX? Okay. I don't know. Look, it's the exact same trade as before. Do you see any real differential in here? This one I paid 29 cents for, closed it for $1. Okay. This one I paid 31 cents for, closed it for just about $1. If you looked a moment ago, the trade I lost in Twitter, what did I actually pay for the Twitter trade? Paid 30 cents for it. You're going to see like incredible consistency in here. All I do, okay, you just got to get up to the plate and keep swinging. And you're like, but that's kind of like, it seems like work. Yeah. If you want to make 210%, okay, on a trade or 245%, you got to put the trades on. Okay. So here's one again. Put it on, took it off, 210% return. All right. CSX earnings butterfly. I mean, that's it. There's not much else to show you in here, but it's the setup, it's the execution, it's the knowledge of which butterfly to put on, when to take it off, all of the above. Again, what our members are saying. I actually like this one, and I put this in here. This was actually from yesterday. I grabbed it directly out of our chat room. It's Andre, and he said, listen, Don sent an email after I blew up my account, okay, by not following these rules. In the email, he said, if I came back, gave it time, be a better trader. Okay. Now I don't make deposits into my account. I just make withdrawals because of you two. And that's actually referring to Don and Corey. Corey's actually one of our other instructors here. It's Corey Rosenblum here at TheoTrade. And I love that one. And again, this is completely unsolicited. It's just, something that came up in our chat room yesterday. And, people look at this and they go, well, so what's possible with this stuff? And again, I like to show trades, like forget about what you think. Okay. I like to show trades that are on, that are plausible, that are in, like real time. So here is Apple. Apple, this trade is on right now. It hasn't even been closed. Am I going to hit? Oh, I'm going to hit something in here. It's a $4 wide butterfly. Okay. The other trade I've got on right now. All right. Forget about trades that I've closed. Starbucks. Okay. Starbucks. Where's Starbucks right now? Ooh, I'm right on the dance floor. Okay. Starbucks sells off like $1. This thing is going to be huge. What else do I have on right now? Okay. I actually did an in-out spread. I should have probably cut and paste this one. I did an in-out spread. You don't see anything on eBay, right? Okay. Let me show you eBay. eBay, look, this is my account statement. Okay. Full Monty here, people, in eBay. I opened the trade for 97 cents. I closed it for $1.93. That's it. Again, I'll show you trade after trade after trade, but I wanted to show you stuff that's real, it's plausible, okay, and what's possible in the extreme. Everybody always asks, we show everything. I specifically will show you everything about my account. In this particular case, if you're kind of curious, the time in these volatile times have been very good. I actually took an account snapshot here. 1, 2, 3 different points in time. By the way, there's another slide to this, which I'll show you here momentarily. This is actually starting in February. This is what we call a 5-day net liquidating value. I figured the best way to display account value isn't to show you just like a P&L snapshot in time. What a 5-day net liquidating value is it literally shows you, again, there's February 23rd, 24th, 25th, 26th, 27th, and it literally shows you how the account is moving on a day-to-day basis. So back in February, the account value, and by the way, the account I'm showing you here happens to be my IRA. This is $211,000 and change. By the end of that week, it was $248,000. Then I took another snapshot a month later, like literally a month later. Okay, this was a huge run. The account went from roughly $211,000. About a month later, it was worth $308,000. Okay, then I took a snapshot this summer. Okay, this summer, it took me a while. I don't mind saying this took me a while from like the end of March all the way into July to work the account from $308,000 to about $392,000. So it's it looks like a sizable jump, but I got to tell you, all right, I hit a tough time in like April and May. April and May moved against me pretty horrifically. All right, now I'm actually going to show you, and again, I couldn't fit all these on one slide, so now I'm actually going to show you a little bit more into context here. Here, this is one that I actually took this screenshot literally last week. By the way, there's no like real void in time over here, right? So this is what, October 16th, okay, the 17th, and if you look at the date, this must be a Friday, a Saturday, a Sunday, okay? That looks like a Monday, a Tuesday. So my account value, for instance, last week, and Friday went from $538,000 to about $550,000. Okay. Then this week, and again, I took this snapshot yesterday, just so you guys know. Yesterday was a freaking huge day for me because it was a big sell-off. But here, from $549,000 to roughly, I'm just shy of 600 grand right now. And yesterday, literally between the 27th and 28th, okay, I'm up about $35,000. So there literally is $35,000 of P&L in those 2 days of trade. I did have a little bit of give back today, but I'll tell you what, if you hadn't looked at the marketplace, and again, I show everything. We're down huge after hours because of some of the earnings that came out. So any give back that I had today, I'm going to be just fine. I gave back about, 7 grand today. And all of that came back into me, after this. And as I said, I like to show everything. Every dollar I'm going to make, every dollar I'm going to lose. Because, it's, again, as I said, it's like the full Monty here. You got to explain every detail of every single trade, or this just doesn't work, And when it comes to these earnings-based butterflies, listen, it's earnings time right now. And then the earnings will die down and we'll be doing it again and we'll do some other strategies in between. But you got to understand these earnings trades, this is what you want to do around earnings. Okay. This became a huge week because some of the earnings based trades, I don't have a lot of risk. I don't have a lot of risk on right now. And I'm still able to produce ridiculous returns in here. All right. Oh, somebody said, how do you make $35,000? First of all, I made $35,000. Okay, I don't trade one contract in here. There's one thing I don't really show you in here: contract size. Okay, there's no onesie twosie in here. In fact, if you want to see exactly what I trade in terms of how often I trade, people always ask me this. Okay, do I trade a lot? And the answer is yeah. I definitely trade a little bit. What I'm trying to show you over here. Let's actually go into activity and positions, account statement. It won't let me break down the actual numbers of trades. Okay, so this is a bunch of butterflies that I've been placing in here. That's just one day back. But if you want to see like what I did over the last 7 days, okay, I have about 58 fills in this account over the last 78 days. Sorry, the last 7 days. The last 7 days, okay, I have about 58 fills in here. And again, I'm going to switch accounts on you. Wouldn't let me actually accumulate. About 8 fills down here. You don't have to do one lot. Okay. If you want to go out and you want to do 100 lots, that's fine too. Okay. You can absolutely do that. And when you start accumulating positions, like the positions you accumulate, okay, are a lot. As I told you today, I had give back today. You can see I'm down $2,000 today in this particular account. I'm literally down $2,000. Why would I show that? Well, because I had a little bit of give back. The marketplace rallied a bit yesterday, and there's a ton of different positions in here. This is not the account though that I'm trading the butterflies in. Usually trading the butterflies in the opposing account over here. But that's what's possible in a much more extreme environment. And again, you'd be surprised what you can do with very small contract size. You want to trade one lot, so you have a $2,000 account, phenomenal. Okay, this account's about 600 grand. That's just the IRA. The other account you just saw is another, a few $100,000 in that account. It's about 400 grand in my other account. So I'm moving about $1 million, in total liquidity. And my P&L isn't necessarily extreme for that type of P&L. Now, the strategy I just showed you over here, everything I just did was displayed live at TheoTrade. Everything. Okay. But the strategy that I'm trying to show you here, it's a little bit more hands-off. Okay, as I showed you a moment ago, I did, about 70, 80 trades over the last week. You don't have to trade like that, okay? The trade results I'm actually showing tonight, specifically for earnings-based trades, are a lot more hands-off. The earnings fly uses set it and forget it order types. If you got a fraction of your time, I am going to say with earnings trades, okay, you got to put them on before the close, like today, 4 p.m. Eastern time. You got to put them on a few minutes before the close. They can be done in like the last 2 hours of the day. And then you got to get up in the morning and then you got to close them. Anytime after the cash open, you really do want to close them though, 2 hours before the bell goes off. So you have about a 4.5 hour window the day after putting the trades on to be able to get out of them. But you can even use set and forget order types, meaning that you can actually set up an order to execute for you. So what I'm showing you is very, very hands off. And again, I also showed you, like, I traded this thing specifically at 11 a.m. I was in at 11 a.m. I was out at 11 a.m. and on with my life. Again, what our members are saying here, I thought this was hysterical and I threw this in here because it came in yesterday. This is actually an email that came in. It said, this message came in through our email system. It said, new trader. I was sitting at my desk trying to figure out how the beep to get out of my Goldman Sachs and Tastyworks, okay, and listening to you. I was so excited. I was throwing up in my waste paper basket and thinking my wife was going to kill me. I got out of Goldman Sachs at 275. Then I got an IWM, in out, as well as an Iron Condor profitable. Thanks, all you guys. TheoTrade is awesome. Thought you guys would appreciate that one. So I think he was actually kind of serious, like throwing up because he actually made money. It happens. It happens to the best of us. Listen, here are some of the characteristics of earnings and earning fly spreads. All right. And to me, the attributes of these spreads are undeniable. You never have to buy or sell the stock. You have minimal risk. The risk is limited to precisely your comfort level. Like, look, the trade below, I put this down here. It's the Las Vegas Sands trade. It's 29 cents. Okay. If you do one lot, it's $29. Okay. Risk is limited to precisely that comfort level. So 29 bucks is right, great. If you want to do a 10 lot, you want to make it $290, that's fine. If you want to make it a 100 lot, like a 100 lot in here, you're literally going to have $2,000 of risk on a shot. You don't need a stop order. No, you don't need no stinking stops. Profitability can be extreme on percentage returns. It's the perfect spread to reduce risk of a stock portfolio. You can actually learn how to use these earnings butterflies to reduce risk. Because if you owned Apple and you were like, I'm scared, Apple could go down. If you had the earnings butterfly on, the earnings butterfly would have padded the landing to the downside. It's an excellent tool, though, also for those, okay, seeking to build some returns in a smaller account. Again, the attributes of this, it's a really flexible strategy that just not enough people understand. Like a lot of people understand expected move. Not a lot of people understand kind of the context of how to go about really using it. Like they just sit there and they're like, yeah, well, I kind of understand expected move. But you got to be able to build the right strategy around it. Like building this earnings fly. Some of you guys are brand new. Don't let options intimidate you. Listen, the spread below is being done for a 29-cent debit, but there are a lot of little facets of trading a butterfly spread that you have to learn. Okay. I always give this analogy and I always think of like options. Options are the power tools of the marketplace. If you want to build a house, what are you going to use to build a house? You're going to use a handsaw or some kind of huge table saw. To build a house, you're probably going to use a table saw because it's going to be what? It's going to be quicker. It's going to be, faster. In the end, it's probably going to be safer. It's going to be easier. It's going to be tremendous, right? In comparison to a handsaw, which eventually you'll just wear yourself out at. And when you start looking at like options, they're the same things. Right? Options are going to be the quickest, the fastest, the safest, the easiest way to get where you want to go in the markets, but you have to use options correctly. Like otherwise you're going to lop off a couple of fingers. And I always think of that analogy because people go out and they're like, I'm going to try this a little bit here and try a little bit there. Okay, great. What butterfly are you going to buy? Right? Listen, everybody can do these things. Everybody can do like these spreads. Listen, if you have a $2,000 in your account, you can do this in an IRA. Somebody just asked that question. Of course you can. Okay. All right. You don't have to get worried about being put to stock or stock taken away, right? All of that, okay, you can mitigate those risks. So people are worried about this, that, and the other thing. You don't have to be worried, right? This business is much easier, okay? Much easier than people make it, right? Listen, don't let options intimidate you. We can show you how and when to place earnings fly spreads in a matter of a couple hours. And what we do here at TheoTrade is we create detailed recipes for every strategy, including earnings fly spreads. And whenever I talk about, like criteria and people again, they don't really know what I'm talking about or recipes. It's like baking a cake. You got to go in with a recipe. Okay. And most people, when they trade in this business, don't have anything to follow. They don't have that recipe book. They don't have a definitive set of like pre-flight criteria, and you need that. Okay. This is what you need to successfully enter and exit earnings fly spreads. What makes a viable earnings fly candidate? You guys tell me. Let's get some positive feedback on this one, because like, what would be a good candidate for earnings? Other than the stocks I just showed you, right? It's funny because a lot of people, they came in here and they said, do me an example on Amazon, right? So do an example on Amazon. And again, as I said, this is one of my accounts. I will show you. I have multitude accounts in here, but and I don't mind totaling up the accounts too. But you see a trade here on Amazon? Okay. Do you see a trade on Amazon? Because I don't. All right. Earnings, Google came out with earnings. Do you see anything on Google? I don't see anything on Google. I don't think I have anything on Google. Why am I not trading Google? Because you have to know what makes a good candidate. All right. You have to know what volatility you should seek out. We're going to learn stuff like Tesla. Forget it. You're done. You're not going to trade Tesla. Okay. Listen, there's lots of trades you could do on Tesla. And you're like, but I don't like you now because you said nothing on Tesla. I love Tesla. Okay. Right up until I shorted it. No, I have no problem trading Tesla. This is not the strategy for it. You can't get emotional about it. You can't love a stock, but I love trading Tesla. Okay. You're going to love to lose money because this strategy is not going to work on it. You have to have the right volatility, the right candidacy, right? The right options expiration, the right options expiration. Because I'll tell you what, if you're wrong, what should I use? Should 1 day, 8 days, 15 days, 22, set, hut, hike? There's a lot of expirations in there, right? Okay. What should be the delta of the options I buy? Now we're getting serious. Like you're like, oh, he said delta. I don't even know what delta is, right? What should be the delta of the options that I buy? What should be the delta of the options I sell? How about if we told you exactly what options to buy in a range, exactly what options to sell within a range? We'll tell you the volatility, what the volatility should be. We'll tell you what makes a good candidate, what makes a bad candidate. Okay, what expected move do I use? And how do I actually determine positioning the fly? So we'll actually look at the expected move, and based on the expected move, we can start to construct a trade. All right, and we'll actually build the trade around that. Do I do a $2 wide butterfly, a $4 wide butterfly, a $5 wide butterfly? Why did I use a $4 wide butterfly inside of Apple, but then I used a $2 wide butterfly inside of what? eBay, and then I used a $3 wide butterfly inside of Starbucks. Okay, there's answers for this. How do I actually build the trade? Like literally, how do you click and build it? What's the right amount of risk for me? If you have a $2,000 account, how many contracts am I doing? A $10,000 account, a $100,000 account? You got to fine tune the right amount of risk for you. We can help you do that. Let me show you what we do here at TheoTrade. TheoTrade creates a recipe, okay, in trading. And what recipes in trading, what it really breaks down to, and I guess the best way to explain this, and again, I like to use these analogies, but a recipe in trading, it's a pre-flight checklist. Okay. When building criteria for a trade, I'm actually going to tell you a little backstory to this. When I say TheoTrade creates recipes in trading, I mean just that. And here's some of the backstory to it. So what a recipe in trading amounts to is this. I flew around the country and all over the world. I was an executive, again, for a major brokerage firm. I ran the education division. I've spoken at conferences literally all over the world, from Singapore to Australia, to Canada, you name a major city in the United States. And I've been there dozens of times, and I've spoken in front of literally millions of people over the years, right? Now online, it's even more than that. It's insane. And in all the years of that, there was one thing that always got me about like retail traders. They would literally put on positions with tens of millions of dollars of risk. And I don't mean one person. Okay. When at the time I was working at Thinkorswim and TD Ameritrade, I've seen people literally risk tens of millions of dollars collectively, not knowing what in the hell they're doing. They were risking like money in stocks that were completely worthless. And they never had a game plan that they stuck to. They started with a game plan, but they never had a game plan that they stuck to. And, when flying around, I'd watch these pilots get on a plane, right? These guys have like iPads and stuff, didn't matter. They would actually pull out like what looked like a flight manual, open up the book and actually go through checklists. Guys walking around the aircraft, the pilots are in there and they're going through these checklists, and everything is to what? It's to predetermine if everything is right. Right? And then when they get in flight, they're doing the exact same thing. They're literally going through checklists and you're going, well, what if this happens? And what if this happens? And what if it happens? Because I'll tell you what, trading is answering the what ifs. What might be a good stock or ETF candidate? What's the correct options expiration cycle? How much capital do I commit? What strike price option do I buy? In growing a small account, what should my allocation be? We have those answers. So we build these recipes with very definitive criteria. It's actually checklists. And then once you get into the strategy, okay, then you have to hit variables. What if the stock goes up? What if the stock goes down? What if the stock stays flat? Earnings is coming. What happens if I'm an exercise or assignment risk? Every unique variable that you're going to encounter has to be covered. You have to account for all of these variables. What if the stock goes up? What if it goes down? Again, we have those answers. We'll give you the right probability for the trade. When it comes to earnings butterflies, it's about probability. I'm going to say that again. When it comes to earnings butterflies, it's about the right probability for the trade. Okay. You need to know, does my earnings butterfly need to have, okay, a 10% probability, a 20% probability? Okay. You need to know exactly how many option contracts to trade for the account size. You need to know precisely when do I close this fly out? Okay, what if the stock sells off big? What's the correct return? What if we rally massively? Can I fix a losing trade? Okay, it's what if. Okay, and then once you get through the what ifs, it's now what do I do? Now what do I do? Now what do I do? this is the answer to your questions. It's all about how, when, why, at what price. People, it's just the beginning of the variables you're going to face while trading and earnings fly. And you have got to get that down. This is what we do here at TheoTrade. Listen, you can read, everybody here can Google what a butterfly spread is. 10,000 pages will show up if you Google what a butterfly spread is. Maybe you already know how to build a butterfly spread. None of it, though, is going to have TheoTrade's recipe for success for earnings butterflies. Okay, that's what we're about. It's not about, like, oh, it's about expected move. Okay, I already told you exactly where the expected move is. It's right here. Okay, I already told you kind of where I'm constructing and what I'm doing in terms of these trades. But I'm going to tell you right now, it's not about that. It's all about the recipe for success. It's about getting the right butterfly, the right probability, and the right product, the right volatility, the right strike prices. Okay. And then once you get into it and actually you'll feel like a rat going through a maze the first time looking for a piece of cheese. And once you get the piece of cheese, okay, then you got to say, well, what's the correct return? How many contracts did I do? When am I going to get out? That's what we do here. 20 plus years of trading experience. That's just me. I had access to client order flow for 15 years. I was telling you a backstory. I was flying around the world for like 15 years, okay, watching people risk literally tens of millions of dollars with no real game plan. So when I was at TD Ameritrade, I came up with the idea like, hey, we should have really definitive criteria, okay? We should tell the clients, this is what you should do. And guess what? The regulators turned around and said, you can't do that. You can't tell people what to do, okay? And I go, well, I'm not actually telling them to trade Apple. I'm just telling them, here's the criteria you should follow to be able to build a trade. And the regulators turned around and they said, no, you can't do that. You can't do that because you're a regulated broker dealer. And that's when we made the decision, no, I don't have to be anymore, okay? 2015 came around, the contract ran out, okay? I ran. And with me followed an entire crew that helped run the education division of TD Ameritrade. And I'll introduce them here momentarily. But again, this is just my experience here, 20 plus years trading experience. We had access to client order flow for 15 years of that. And we literally viewed and studied millions of trading accounts. Again, that's what you're here for, is criteria. It's to learn how to get in these, how to get out of these. Okay, criteria is your recipe for success. The following strategy, earnings butterflies, and the corresponding criteria requires the utmost attention to detail. We literally spent years fine-tuning this trade and the setup and the criteria. And when you approach the section on criteria, you follow the steps to build a trade. Okay, we build a 4-hour course specifically for this. It's the guide to maximum edge trading earnings. I'm actually the trade instructor for this one. And the class, by the way, this class, it's ready to go. This one's in the can. It's already ready to go. So what we did is we put together a 4-hour class, okay, cleaned it, edited it. It's already ready and it has 24/7 access. The class has a slide deck with it. We actually give you a PDF file. It includes all of the entry and exit criteria, okay? It's a checklist and it's available immediately, like tonight for download. The course is archived 24/7. And we also, here at TheoTrade, we have our own iOS and Android application. So you don't have to necessarily be even like online. You can download this course to your device and watch it even while offline in the middle of the night, on a plane, whatever does it for you. Okay. Now the course, it's $497. And before I go any further, I'm going to tell you right now, okay, we have an incentive this evening for you. And again, I want to actually detail something before I go any further tonight. So this evening, I kind of alluded to a couple of different strategies. Tonight, okay, is about the guide to maximum edge trading earnings. It's about what I term these things is earnings butterflies, but I also call them, okay, E-flies. So we call these things E-flies. That's what you're here to learn tonight. We don't stop there, all right? And I'm just going to tell people right now, we give you an incentive, but what we do here at TheoTrade differentiates us from literally anywhere else out there. And I'm just kind of curious. So there's a lot of people obviously tuned in tonight, but how many of you guys have been to education elsewhere? It's okay. I'm not offended. People have been to education everywhere. And I mean, they go to all these free different webinars here. And what you're going to find, a lot of education companies, we built this company to really differentiate ourselves. Okay. You're going to go out there and you're going to take a class, and the class is going to cost you $497. Okay. And then they're going to go out there and they're going to charge you another $497 for what? Well, you took a class, but then you have to buy the indicator for $497. And then when you're done buying that indicator for this class, you probably have to take another class to learn how to use this indicator, or they're just going to have another class because this crap probably didn't work, and they're going to end up charging another $497 to have an indicator for this class, and before you know it, you're in the circle of life. You got to forget all that garbage. We built TheoTrade to be just a huge departure from what you guys are used to in this industry, and we've had enough of that. Okay, what we do here at TheoTrade, we do not sell individual classes. Okay, we do not sell individual classes. What we do here is give you everything that you're going to need to succeed in this business. And I'm going to tell you, when somebody says like everything, sorry, I'm dropping my keyboard over here. When somebody says like everything, what do you mean? Okay, how about after you take this course, which is eFlies, you can email me one-to-one for support. Sound reasonable? Okay, by the way, we will respond to your emails. We have 6,000 clientele. It's fine. We have more than enough instructors. I will answer your email directly. I spend 4 hours plus a day answering emails. It's fine. How about, okay, after you take this class, okay, you can hop in our chat room anytime you want. You can come in there and actually discuss trades with us. How about we actually spoon feed you trades if you want them? Okay, we text out trades to you. You can email us about it. We'll text out to you trades. We'll even use push notifications. How about we give you access, though, to not just this class? Because you know what? Somebody in here is brand new to options. Somebody in here is brand new to options. They don't even understand, what an option is. How about we can actually get you ramped up in options? Okay, all of it. And before I go any further, I just like to tell people right now, what you see here this evening isn't even scraping the surface. The guide to maximum edge trading earnings, this is why you should become part of TheoTrade. And I'm going to take you through the curriculum, but I'm telling you, stay tuned for a minute because you're not going to believe what we do, okay? And at the price we do it, there is nothing in this business anywhere at any amount of money that you can spend that's going to be comparable to what we do here at TheoTrade. By the way, I'll put my money where my mouth is on that one. There is nothing in this business anywhere else at any price. Go check around, and most of you guys have been around a little bit, okay? Let me get through some of the course curriculum, and then I'm going to show you exactly what I mean, okay? And yes, we have an incentive this evening. What is an incentive? It means a discount. We're going to give you a discount on the $497. This thing is worth, okay, 10 times this. Right? People have already spent, that are listening to me tonight, have already spent $5,000 on courses. Okay? You're going to be furious when you see what we do at the price that we're capable of doing it for. Listen, this is actually the guide to maximum edge trading earnings. Here's the actual course curriculum. When I say course curriculum, this is what the course is actually going to detail. One of the first things, how to use earnings butterflies like seasoned traders to generate consistent weekly returns during earnings season. How you can predict with high probability where the stock price is going. This is actually expected move, right? Number 3, how you can trade even the most wild earnings event. It's a really low risk, high probability of accuracy. Number 4, earnings butterflies are great for small accounts. I bring that out because people feel like in a lot of classes, like I just don't have the capital, $2,000. Okay. And yes, you can do this in an IRA, which I'll detail here again in a minute. Number 5, how to use defined risk reward strategies. You're never going to lose sleep over the positions again. Like you're going to put on these butterflies. You're like, oh, whatever, man. I got $300 at risk. Number 6, how to build your own earnings butterflies with detailed step-by-step entry and exit criteria right here. This is the reason that people come to TheoTrade. Okay. It literally says step 1, this is what I look for. Step 2, okay? Which stocks are going to make the best candidates for eFlies? What strike expiration do I use? We're actually going to give you deltas, everything. When to open them, when's the best time to close the earnings butterfly? Why trading earnings announcements does not mean you need to be glued to the screen all day. And this can be done, very minimal options experience, retirement accounts. Again, if you have $2,000, but what is critical? You got to follow the recipe to be able to build a trade. And I reiterate that time and again. That's a little bit about what we do in the earnings fly class. The way, Okay, another one, what our members are saying. And I love this one. It came in on August 3rd. I know it's an oldie but goodie, but it says, woohoo, thank you, Dom. Okay, this actually comes from Ken. I blurred out his last name. I'm never sure of trades that are new to me, okay, that I structure myself. This gentleman is actually building a trade off of an idea that we had. This is great to hear. Not to brag, but this is due to you and your magnificent team. I'm up this year 1.67 million in profit. Yes, I'm going to pull a big hunk of this out, okay, my wife accounts, and plus I'm going to give my granddaughter $50,000 to work at her master's degree thanks to all of you. I'll let you know how this trade goes. I need to check the chart on the Japanese ETF. Thank you again, the Blank family. I figured I'd throw that out to you. By the way, I don't mind saying, Ken, I know Ken. Ken actually has a decent size account, but $1.67 million is ridiculous. I don't want you guys to think this is a $10,000 account because it's not. Ken started with a couple million in the account. Nevertheless, $1.67 million is a lot off of that. Listen, you want a bonus. As I said, we have a little bit of an incentive. What we do here at TheoTrade goes beyond one class or one indicator. Like we actually understand. Again, I was around this business, okay, for 15 years before we started TheoTrade. I've seen everything out there in terms of education. And I get that people want everything to be able to trade. They want everything to be able to invest. They want it at one place and they want it at one price. Here's the first bonus this evening. We give you access to over 97 trading classes tonight, today, right now. Everything we've got. From the day that we started TheoTrade, we give you access to everything. We give you the guide to maximum edge trading earnings, a $497 class. That's what we talked about tonight. It's archived immediately. Good. Okay. Guide to surviving and thriving in extreme volatility, volatility back spreads, guide to in-out spreads. Remember, I actually showed you a couple in-out spreads tonight too. You want to know why? Because I was alluding to this. Okay. There's a black book spread class, how to collect income being short. Okay. This is the next big short, the risk twist spreads class. People, that is the mother of all trades. Okay. High probability spreads, iron condors for income, selling premium, minimizing your risk, day trading NASDAQ futures. This is for people that really do want to trade intraday. Covered calls, if you want to be mom and pop that just sell a covered call. All I'm doing here, this is scraping the surface. There are 97 classes in total. We're giving you access to over $9,000 in classes alone. That's putting a price tag on the classes, by the way, at like $100 a class. And you know as well as I do, everybody else out there, they'll charge you $500 a class, $500 a class. Nothing is going to come close to what we are doing in these courses. Nothing. Every one of these courses too. And again, I'll actually show you, okay, the classes this evening. When I say I'm going to show you the classes, I'm going to show you the classes. Like when I say I'm going to show you classes, like here, I'm literally going to show you what the archive looks like, option strategies. You know, some people are asking me about directional. You want to learn about technical analysis? There's second to none here. Look at this Fibonacci class, contrarian trading class, RSI Unleashed. It goes on and on. Like we don't stop, people. And we keep adding classes constantly. Okay. No one can keep up with what we do here at TheoTrade. And you're like, well, how's that even possible? Because I want to introduce you to the instructors. So we have 97 classes. This TheoTrade is not the Don Kaufman show. Okay. You know, if I get hit by a bus tomorrow, but I don't think there's too many buses on this island. If I get hit by a chicken tomorrow, we have Jeff Bierman, Matt Williamson, Corey Rosenblum, Brandon Chapman, Steve Miller, Tony Rago, Blake Young. I'm going to do a brief smattering. Jeff Bierman, everybody that's on Thinkorswim. If you know what Thinkorswim is, Thinkorswim has one of the best charting applications in the industry, bar none. Jeff Bierman, okay, I met him originally at Thinkorswim. He's an analyst. He's a former hedge fund manager. We hired him at Thinkorswim because he was the man that understood charts. He helped build over half the studies in the Thinkorswim charts. He was also the former chief market technician for TD Ameritrade. What does Jeff do now? He works here at TheoTrade. He kind of moonlights with us, but he's also a professor of finance, okay, at Loyola in Chicago. He's actually teaching a master's level course this semester. It's his first master's level course at Loyola. You can actually pay $42,000 a year for Jeff at the university, or you've got him here at TheoTrade. So you have full access to Jeff. You can email him anytime, right? Next one, Matt Williamson. Matt's a market neutral. He's a premium selling options strategist. For those of you that want to learn to sell options premium, to mitigate risk, this is your guy. Engineers absolutely love this guy. Shoot him emails. till your heart's content. Next on the list, Corey Rosenblum. By the way, Corey also has the designation of CMT. To be fair, so does Jeff Bierman. He's also a CMT. We have 1, 2, 3 CMTs on staff. Okay, CMT is an extraordinarily difficult designation to acquire. Every one of these instructors has a minimum of 15 years of experience, okay, of trading, not just 15 years of business experience or whatever, 15 years of trading experience. Next on the list, Brandon Chapman, okay. Did I miss Corey? Corey Rosenblum. Sorry, I missed Corey. Senior strategist and our resident swing trader. Corey, again, is also a CMT. If, okay, you're looking for shorter term, I want to get in, I want to get out, I want to get on with my life, you're going to love what Corey does. Nobody does it better than Corey Rosenblum. He's our trader that's on the close every day. You'll understand what that means here in a minute. Brandon Chapman, CMT, macroeconomics, technicals, and fundamentals. Brandon also comes from Thinkorswim and TD Ameritrade. Brandon wrote the course manual for us at TD Ameritrade. And I'll just tell you really quick, Brandon, there was a course at TD Ameritrade that cost $24,000 for an 18-month long course. I bet you anything that some of you actually took this course, okay? So Brandon actually wrote the course material for it. And people paid $24,000 for this. It was an 18-month long course. He'll be the first to tell you what we do here at TheoTrade just absolutely smokes what we did years ago for $24,000, okay? I mean, this was great material. Was it worth 24 grand? Sure. 10 years ago, it was the only place in the world you could actually get that. Right now, okay, forget about it. What we do here at TheoTrade smokes it, okay? Again, send lots of emails to Matt because he's listening right now. Lots of emails to Matt, especially the engineers. Steve, Slim Miller, he's a 43-year veteran stock options and futures trader. Slim, okay, is kind of our resident psychologist here. If you have trading trouble, okay, between the ears, this is your guy for you. Slim is also phenomenal in cyclical analysis. I'm not joking when I say I've actually known Slim since I'm a kid. Next on the list, Tony Rago. He's our NASDAQ futures. All Tony Rago does all day, every day, trades NASDAQ futures, calls out trades all day, every day. He literally trade all day long is calling out setups. He's our intraday strategist. Last but definitely not least, our latest acquisition here, we picked up Blake Young. Blake Young also hails from both Thinkorswim and TD Ameritrade. Market profile specialist, futures, currency, okay? He's also a former hedge fund manager. This is our team here, obviously myself included in that. We have 8 full-time instructors, and this is just the beginning. Again, when I say it's just the beginning, we're always looking for new talent over here. It's how we keep up. We have over 6,000 clientele right now at TheoTrade. So the first bonus again tonight, access to 97, classes produced by these individuals, okay? Second bonus, we give you a TheoTrade VIP membership pass for free. It's 3 months access, unlimited access to TheoStream. TheoStream basically gives you what? It's got, obviously, 3 months, live trading chat room. There are chat rooms that will charge you $200-300 a month to be part of, okay? It's part of this. So we give you all the classes that we have, then we give you the chat room. We broadcast live for 6 hours a day. Literally, we're streaming 6 hours a day. No one wants to watch 6 hours a day. It's all recorded. Everything's recorded. You can even play it back at 2 times the speed if you want. You don't have to listen to the whole day. Everybody kind of tunes into sections they like. The traders, though, provide real trade ideas, real-time market insights. We do push and text notification, infinity spreads, okay, in-out spreads, risk twist spreads. We'll push it all to you. We have 5 distinct trading portfolios. We have daily coaching sessions. What's a coaching session? A coaching session is continued education. Continued education is predominantly done by none other than Jeff Bierman. Why? Because the guy's a professor in finance. This is what he specializes in, right? Stocks, options, futures, technical analysis, and last but not least, okay, being part of TheoTrade, the instructors will directly answer your trading questions by email. Now, I put a huge amount of stock into this, no pun intended, okay? I put a huge amount of weight into this because I'm going to tell you right now, if you can email us one time, you think it's going to save you more than $1,000, okay? And when I talk about emailing us, you can email us. You do not have to email us and say, my friend has this position and my friend is in trouble with this position, email us. Be very straightforward. Most of us here at TheoTrade have carried multiple brokerage licenses. I had a Series 3, a Series 4, a Series 7. I had a Series 24. I had my Series, 66, which is actually, a 63 and a 65 combined, yada, yada, yada. You want fries with that? I was good at taking tests. In the end, we know how to answer emails. We're not afraid to actually talk directly about trades and trade related questions. Email us, people. That's what we are here for. Okay. In addition to this, we'll give you access to all of our proprietary indicators. This is where people, they just, they join these services and they're like, it's $200 for a chat room, then it's $500 for an indicator. And then before you know it, you're a couple $1,000s deep. We do it all. We do it all. We're actually going to give you the auto expected move, the earnings expected move indicator. I'm going to give you that one here momentarily. Gravity points, RSI Laguerre, Quantix, NQ levels. This is just a smattering. Right here, just the SPX expected move indicator. This stuff's huge. Unusual put options activity. We have everything. It's another $1,800 plus in indicators and scans. We give you this to you tonight. You can actually download every one of the indicators tonight. Like, we get it. What we do here, TheoTrade includes everything you need to invest, everything you need to trade. We do classes, we do coaching, we do email access to the instructors, right? We do a live trading room and live trades, indicators and scans. We even have mobile access where you can actually enter in any mobile device 24/7. It's everything you're going to need to succeed. What we built is the Netflix for traders. I mean, that's what TheoTrade really is. You name a genre of trade, we have an instructor for it. Tonight, it's $297 for 3 months. That's it. It's $297 for 3 months. One thing I didn't even cover yet. Okay. There's new monthly classes. We're going to rip out new classes here in the next few weeks. Yeah, we didn't have a class coming up next week because there's an election apparently. But there is new monthly classes. It's $297 for 3 months. Before I go any further, I'm going to tell you right now. Okay. It's $297. That is a one-time charge. That's it. This is not a membership. Somebody always asks me what happens after 3 months. I'll tell you what happens after. Pay another $297. Do you want to do it again? Pay a $297, whatever. Do as many times as you want. Okay. We no longer do memberships here. We don't do memberships. We do not sell classes individually anymore. Why? It's not worth it. It's just not worth it. We do everything or we do nothing. It's $297 for 3 months. No one can touch what we do here at TheoTrade. And that's why we have over 6,000 people right now on the site on a day-to-day basis. Listen, we give you what? The guide to maximum edge trading earnings, access to 97 classes, new monthly classes, a live trading chat room. We broadcast a minimum of 6 hours a day. We give you the indicators, text and push notifications, daily coaching sessions, instructors. Everything is archived. Go now to theotrade.com/edge. All right. That's E as in echo, D as in dog, G as in golf, E as in echo. It's theotrade.com/edge. Now, before I go any further, okay, it's a riskless trade. Tonight, everything you need to start from absolute novice to expert. And I'm going to actually show you here in a minute. People are like, oh, I'm brand new to this and where am I going to start? What I'm going to show you here momentarily, okay, is just that. When I show you here, we have a start here menu. Novice to expert, I'll take you back to that in a second, but I just want to go through this, okay? I don't want anybody to feel like, a little uncertain. Let's take all the risk away, okay? Listen, the first 30 people to enroll tonight, and I'll show you in a moment, the first 30 people to enroll tonight, okay, I'll make it a completely riskless trade. And we're not going to define what satisfied means, so I'll just throw this out here to you. Listen, we'll provide you everything you need to start trading from novice to expert. The money back guarantee is this. It's just to make people feel comfortable, right? It simply says trade with us over the next 3 months. If you're not satisfied, okay, I don't put anything around satisfied. Like if you're questioning what's satisfied, you determine, okay? Email support@theotrade.com. Provide us the details of your trades. Okay. And if you're not satisfied, just receive a full refund. Listen, I just make this as easy as possible. People, it's $297. Okay. We don't want to do some $5,000 crap, and have people get pissed at us. It's $297. You don't like us? Please take your $297. Okay. We want people here to be happy. And that's important to us. And and if you're not happy, First, please email us. Like, tell us what's wrong. Like, what do you need help with? Okay, we're here to help people. I mean, after 15 years in the brokerage business, this is what we did, and that's what we built TheoTrade for. The only stipulations we have here, here's the to make this fair. Okay, you have to trade live. You got to do 10 trades in any of our course criteria in the next 3 months. So we'll actually text you out more than 10 trades. Your initial account value has to be at least $2,000. Oh, you got to follow our criteria for earnings butterflies or whatever trade you do. If you do in-out spreads, follow in-out spreads. But all I'm saying is this, okay? If you're going to trade live, we force people to trade live, and I'll tell you why we force you to trade live. Because we didn't have these stipulations on before, people would actually literally sign up for $297, and 3 months later they go, I just want my $297 back. We'll go, oh, what happened? What happened? Are you not happy? Did you not do so well in some of the trades? Like, please tell us. And they go, no, I didn't trade. I just want my $297 back. I just came for free. Okay. So if I'm willing to put the time and effort into the classes, you got to be willing to put the time and effort into the trades. And I think it's fair. 10 trades in the next 3 months. You do 10 trades in the next 3 months, and it has to be real trading. It's not paper trading, people. Anyway, it's good. Okay. By the way, somebody was asking about like Tasty. We don't worry about that. We got an answer for you. We work with Tastyworks. We work with TheoTrade. We work with Thinkorswim, all of them. So this is the TheoTrade riskless trade. If you're not satisfied after 3 months, okay, get your money back. Listen, there are 30 spots tonight. Remember, we're going to work with you directly. Why do we do 30 spots? Because I personally go through and reconcile those trades, and it is tormenting to me, like tormenting, okay? Send us your trades. The $297 offer, it's never been available before with these earnings butterflies. We've never done this before with eFlies. And again, we give you access to every single course, every archive that we've ever done, And in fact, you know what? Let me actually take you over to the site right now and show you a little bit, because there's a couple of like really definitive questions coming in here. First of all, this is the, here, I'm actually going to jump onto this page right now, make sure everybody's on the same page. If you follow me over right now to this particular page, because some people are asking about the indicator, and I want to make sure everybody knows exactly where the indicator is, okay? It's theotrade.com/edge. Again, it's Echo, Dodge, Golf, Echo, theotrade.com/edge. This is obviously where you click add to cart. You click add to cart in here. I just wanted to actually take you through this because I think it's important, and there's already questions coming up. It is not a membership. Okay, the reason I'm scrolling down over here, it is a one-time payment, okay, of $297. Again, it's a one-time payment of $297. And the other thing I wanted to show you in here, because this just came up a moment ago, but please, okay, put your phone number right in here. The reason you want your phone number in there, because we're going to text you if you want text messages. If you have a smartphone, you do have to have a smartphone of some kind, anything that can receive text messages. If you can't receive text messages because you're, living possibly in Singapore and your text won't come through, use push notifications through our app. So we thought of that one, but I wanted you guys to know, again, it is a one-time, okay? It is a one-time payment here of the $297. All right. The other aspect in here, there are 30 riskless spots right now. I'll let you guys know as each individual enrolls tonight. I'll let you guys know that you're enrolled and enrolled for a riskless spot. Again, it's $297. If you scroll towards the bottom of this, and I'm going to answer questions for you in a minute. If you scroll to the bottom of this is the earnings expected move indicator for Thinkorswim. You need not download this if you're enrolling. If you're enrolling tonight, don't worry about it. Okay, don't worry about it. It's included in the site. We give you every indicator here. By the way, if you need to get a hold of us right now, you can chat with us through the GoToWebinar, or you can actually come right into here and actually chat with us right through here. This is actually Jeff Roth. How can he help? Just by the way, this is TheoTrade. If you want to see the site a little bit, this is TheoTrade. Again, somebody actually asked this question again. It's theotrade.com/edge. Come back to that in just a moment. This is what TheoTrade looks like. This is actually our member site. Okay, we're not broadcasting obviously right now. Down below that, this is okay. This is actually all of our clientele chatting back and forth. right? You can look back at literally hundreds and hundreds of chats throughout the course of the day, all of it, okay? Everything is there for you guys to look back on. Pretty much go back as long as you want. I'll show you when we start posting trades in the chat room here, okay? So, okay, we'll scroll back a little bit. We post trades in the chat room here. You know, people are talking about all the different expected moves, okay? All of it is in here. By the way, here are some of the trades that I did today. This is a butterfly, it's a butterfly, it's a butterfly, it's a butterfly. These are what the E-flies. I told you I post them in chat, okay? Those trades are actually posted in there for you guys. Looking back on this, this is the start here menu, okay? The start here menu, this is where we come in here and, you know, hey, I have no experience in options, options 101, options 201, but I am going to say this, even the most experienced trader is going to get huge amount out of this. I think that some people, they get like, this is not for me. This looks a little basic over here. Really? Because there's stuff like order execution part 1, 2, and 3. All right. I worked in the brokerage business for 15 years. There are very few people in the world that understand about order execution from the side of I was a market maker, I was on the brokerage side, and I'm a retail trader. These 3 portions will save you literally thousands of dollars if you're an experienced trader, because what those classes do is they systematically go through, okay, and they teach you how to get better fills in stock, in options, even futures contracts. We cover them in depth over there. All right. If you're experienced, look at stuff like what products to watch and why, getting your risk under wraps and hedging ideas. There's so much in here, right? As I said, there's a class archive. What do the classes look like? So the class archive, there's 97 classes in here. Option strategies, option newbies, technical analysis, day trading, okay, trend trading, hedging strategies, futures and bonds, all right, stock classes. We even have mindset classes. There's a class in here, okay? There's a class in here, one course, like the 5 essential building blocks, you know, this class alone, you'd pay $2,000 for. It's absolutely amazing. It's again, it's a class on trading psychology. My mantra is option strategies. Okay, these are all the classes. You have access to this tonight, selling options for a living. Okay, the guide to small account growth with in-out spreads, right? Guide to maximum edge trading earnings. This is the class that everybody's enrolling for tonight. Volatility crash course, back spreads, trading, you know, tracking unusual options activity, gamma irons, all of it is here for you. Like, and again, you have access to everything tonight. All of this, by the way, when I say it's searchable, you can come in here and actually search the archive. You literally can come in here and search the archive and type in anything, any genre of trade. It's all there for you. Okay. Again, just come over here to TheoTrade. Again, it's theotrade.com/edge. Now I'm going to answer some general questions for you guys, and then we're going to get into very, very specific questions. So, and I'll let you guys know exactly. By the way, there's questions that are popping in over here. It's fine. I'm actually going to go through the generalized questions first. Let's say general questions. There's some of the usual suspect questions that actually pop in over here. Oh, I wanted to throw this up here. I like this, what our clients are saying. I love this one. By the way, you guys are rocking it. Very impressed. It's really refreshing to have you guys putting this together and sharing your knowledge and not upselling, okay, everything and turning and burning your customer base. You've got a customer for me in life. Okay, I got to say that right. You've got a customer for life in me because of this approach. And I'm sure I'm not the only one, right? That one actually means quite a bit to me because that's what we built here. This one, again, very impressed with TheoTrade. I've studied under, you know, stock coaches, various strategy intellects and different trading plans. I've not come across anything as good as what I'm seeing here. The people at TheoTrade are very helpful, extremely knowledgeable. Okay, I'm looking forward to association for years to come. All right, so just to detail everything, it's theotrade.com/edge. Again, the first bonus is access to 3 months of TheoTrade. And again, it's everything's archived. Bonus number 2, it's access to 97 different courses. As I was saying again, theotrade.com/edge. Let me go to answer some general, okay, questions. And those general questions, again, you guys can roll as you're going through here. And again, I'm going to answer general questions, and then I've got a whole list in here of really specific questions. I'll read off a couple of names as well, because I see a lot of people are actually hopping in here and enrolling for it right now. The first question that always comes up that I just want to focus on, okay, you need a laptop, internet connection. We have everything you need. In fact, you don't even need a laptop these days. You can use a tablet. You can use an iPad. Okay, it's fine. In fact, I'm trading more and more now off of an iPad. Okay, that just happens to be me. I kind of like the iPad. I like trading off the iPad as well. So people find that a little bit peculiar, maybe, but it's kind of cool to like. I kind of feel like I'm touching the marketplace with the iPad. You need an internet connection. We have everything you need, and I really mean that. Like, email us. Every question is going to be answered for you. It's there. Okay. Number two, this comes up just incessantly. We don't like memberships here. We just don't like memberships here. And we assume that you don't like memberships. I mean, somebody in here inevitably had a membership, at some gym. The gym gets shut down during COVID. You can't even go. And they're like, yeah, we should charge you anyway. It's not right. Okay. So we started doing $297. And then after 3 months, we're like, do you want to do this again? Do you want to do this again? And that's fine. If you want to do it again, do it again. It's $297. If you don't, we understand. Okay. We'll still love you. Number three. Okay. We're now providing weekly video updates. So we do these weekly video updates. Those video updates actually come out on Friday morning, and the video updates are in-out spreads, they're gamma irons, okay, and they're risk twist spreads. It's some of the core strategies that we use. We do these weekly video updates so you can actually follow. It's not just a text message that comes out to you, right? So we're doing text messages, but now we're doing like these weekly updates that cover every little nuance of everything. Like, what was I thinking when I put that trade on? Because I get those emails all the time. You're like, what were you thinking? I'll tell you exactly what I was thinking. I'll get you like down in the weeds with me of why I do certain strategies, good, bad, or indifferent. You're going to see everything. You're going to see winning trades. You're going to see losing trades. Okay. That's part of this business. That's part of TheoTrade. Number four, we archive everything. Okay. We understand that you can't watch all this stuff. Like, we literally broadcast now. It's not even 6 hours a day. We actually broadcast 6.5 hours a day. Wednesday, we even do 7.5 hours a day. We do a happy hour every Wednesday. It's a lot. We archive it. Okay. We archive it. You can watch it at your leisure, but we also give you mobile access. And the mobile access, you can actually play it back at like 1.5 times the speed or 2 times the speed, whatever does it for you. So you actually play all this stuff back on your mobile device. A lot of people actually say to us, they're like, I drive home at night, coming home from work. And I go, what? You actually work? Okay. Or better yet, you're going to work. We have more people on TheoTrade watching live now, okay, since March than we ever dreamed. I mean, it is awe-inspiring. There are more people, okay, on TheoTrade than were on Thinkorswim when I was back there 5 years ago. It's become that large now. There are so many people in the chat room. There are literally thousands of people in our chat room on a day-to-day basis. And it's great. I mean, again, it's working. I mean, that's what we built this company for. Number 6, add your cell phone number when enrolling. Receive trade ideas via text message. Okay. Number 7, you can email us anytime. Seriously, you're going to receive a response within 24 hours. By the way, I throw the 24 hours in there, and I want you to know this. Please do not email me with 5 minutes to go to the close on a Friday afternoon in the middle of volatility, because you do have to remember one aspect about this. We are traders. We are traders, and we are trading during the day. I do answer emails during the trading day, but if markets are rocking, so am I, right? Give us 24 hours. So just a little bit of planning. I'm not asking for a lot, man, just a little bit of planning ahead, okay? But I'll get back to you within 24 hours. By the way, we answer emails all throughout the weekend. We don't care. We've got an entire crew that distributes emails over the weekend. We get them done. I mean, again, I've had 3 kids home since March. So I love hiding and answering emails. It's the only quiet time I've got. So all right, number 8 over here. Okay, number 8 is very simple. We give you access to everything we've done since we started. Classes, coaching sessions, everything is searchable. Okay, everything is searchable. Every single word that we speak here at TheoTrade, it's all part of it. Okay, it's all part of it over here. Number 9. All the trades that you've seen today, okay, can be done inside of an IRA, retirement accounts, okay, or as little as $2,000 in the account. And the reason that I always mention this, you can do this with as little as $2,000 in the account. People get a little bit, upset about that. They're like, can I do this in an IRA? I trade in my IRA, okay, most of the time, right? I trade inside of the IRA most of the time. So the other aspect is, we at TheoTrade, because somebody already asked this question, we at TheoTrade, we can help you okay, get approved for option trading at several different broker dealers. So we have access to, obviously, Charles Schwab, which is, TD Ameritrade. We have contacts there. We have contacts at Tastyworks. We have contacts at E-Trade. If you have a problem with your brokerage account, okay, we can go to bat for you. We can help you guys out. Remember, there are 30 riskless trade spots available tonight. So be in the first 30 people, okay, that enroll this evening. In fact, I've got the first batch of names over here for you guys. By the way, it takes me about 5 or 6 minutes before I see your name come through here. Again, get results, enroll for TheoTrade now. There's no risk tonight in enrolling for it. It's TheoTrade.com/edge. I'm just going to read off a handful of names. And again, I'm going to go and jump back to your individual questions as some of the names come in. I'm going to butcher this first name. So Annette K from California, Stephen P from Florida, Brian R from Washington, Julie W from Florida, Bruce B from Arizona, Fark from the UK, Year A from Pennsylvania, Troy B from Florida. It's the first handful of names that have actually come through. And again, there's 30 riskless spots available tonight. As I said, I'm going to jump forward, and I wanted to answer some really specific questions that came up in the chat room. So I've kind of copied and pasted a few of them. All right, Andy had a question, and I wanted to actually address it. So Andy, hopefully you're still in here. By the way, somebody else just asked. Again, the address is right here, theotrade.com/edge. In fact, if you don't mind, I'll actually pop this up over here, make this even easier for you guys to see. Again, you just click add to cart, put in the information, you're ready to roll. Theotrade.com/edge is the address over there. All right, some really specific questions. Again, I wanted to hit upon Andy first because I thought this one. Do you ever get put stock if you don't close the position? So Andy, in the money options, okay, should be closed prior to expiration. But there's an entire area of this course, specifically the earnings related course, that teaches you how, okay, to deal with the possibility of exercise or assignment, and more appropriately, how to actually circumnavigate exercise or assignment. There's no question about it. Like it's always like, it's a risk. I'm taking this stuff close to expiration. We're never going to put you in the position, okay, where you're going to have an exercise or assignment that you didn't want. And I want to make that clear. We're never going to put you in a position. That's, okay, what criteria does. All right. So hopefully that kind of answers it. All right, so Grant actually said, do you use the RSI to determine to use a put or a call fly? Grant, not a chance. I actually don't use that one at all. So, I mean, we have our own indicators here, like the RSI Laguerre. I'll use that, but not for earnings. The one thing you learn about earnings, there's actually a part of this class that does, in fact, talk expressly about directional bias, okay? So I hope that makes sense, but it's not what you think. It's not an indicator of any way, shape, or form. And you know what? I'm not going to give this one away because it's a big portion of the course, but there is a portion of the course that talks expressly about directional bias, but it has nothing to do with charts in any way, shape, or form. And I'm not trying to belittle charts. The thing you have to understand about earnings, okay? You know what? There's a couple stocks tonight that had unbelievable earnings, okay? There were some unbelievable earnings that came out tonight. Like Google had just incredible earnings. Look at that, stock's up huge. And then if you took a look at like Apple, okay, Apple actually beat their earnings and so forth. Oh, the stock happens to be down. Okay, there's no rhyme, no reason. You're never going to get, okay, that great feel for earnings. We will give you, though, some areas that I think can help you tremendously around earnings and earnings related trades. So I just figured I'd throw that out there to you. All right, next on the docket over here, and I'm just going through a couple of questions, and then we've run a little over in time, so we'll call it a night here in a couple of moments. Right. Okay. Somebody said, sometimes does the stock move 2 or 3 sigmas? And the answer is absolutely, of course. Unexpected moves are going to happen. Okay. It's not really going to negatively impact the outcome of our butterflies, though, because it's part of the mathematics, it's part of trading. Instead of the stock moving $5, the stock moves $15. You go, oh man, you told me it was going to move 5. No, 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 no. We said the highest probability is a $5 move. Okay. The low probability is a $15 move, but it happens. It absolutely happens. Okay. So I love this. Somebody said, how'd you decide to take the shot to the downside in Apple? Why not the upside? Ah, that's actually going to be taught in the class. Okay. There are certain things that I will give away tonight, but that's one we're saving for the class on that one. It is a biggie. Okay. And there is a very, very express reason that we did just that on Apple. Okay. Somebody said, are you only trading this during earnings season? You can trade earnings, okay? Pretty much there's always earnings coming out. Like retail stocks come out at a very different time of the year. So, or a different time, I should say, in the cycle. There's always earnings coming out. But this right now, the reason we're hosting this evening, okay, we are in the thick of earnings right now. Like, could there be a better night to do this? And you just had the earnings of 4 of the biggest companies ever in this history of this marketplace. The biggest companies like ever just had their earnings over there. So we thought, but yes, you could do this, okay, pretty consistently throughout time, and just be aware of that. All right. By the way, when somebody says there's no earnings whatsoever, what do I do? Well, we have a ton of other coursework that we can actually walk you through, that we can again, take you through like in-out spreads and so forth. This is not going to be like a one-trick pony. Obviously, there's 97 classes that we're giving you access to. All right, let me move onward from here. So if I open a $20,000 account, okay, am I still going to pay the $100 monthly subscription? First of all, TheoTrade is not a brokerage firm. TheoTrade is not a brokerage firm. Okay, we are strictly education. So we do not house your brokerage account. Okay, we use Charles Schwab, which is Thinkorswim. We use E-Trade. We use Tastyworks. We have strong suggestions on which brokers are going to be the most effective for you. So the $297 for 3 months is exclusively to TheoTrade. What you do at your brokerage firm, well, we've got all kinds of, again, negotiated rates and so forth over the years. But right now, the brokerage firms, commissions, people, it's utopia out there. It's literally, it's like almost free now in terms of trading, and option contracts, it's dirt cheap. All right, couple more questions I'm taking over here. Oh, a couple more names came in. David S. from Kansas, Keiko K. from California, Forrest C. from Alabama, Marilyn M. from Canada, Peter L. from Missouri. Every name that I've mentioned thus far, okay, you guys are all portions of the riskless trade, which is, for the most part, you're in TheoTrade. You're one of the first 30 that come through. Again, it takes me 5 to 10 minutes before I actually see your name populate in here after you enroll. So I apologize if I don't hit every single name over here. All right. By the way, thank you, Marilyn. I just saw your post in there. So the next one over here, I like this one. Is your max loss whatever your risk on the losing side of the trade? And the answer is yes. Okay. Tomorrow I'm going to have a losing trade in Twitter. It's okay, because I actually hit big in Apple. I'm going to hit in Starbucks over there. I can't reiterate enough. When you're doing this, okay, you don't even have to hit 1 in 3 trades. 1 in 4 is enough, okay, to see larger degrees of profitability, right? So somebody also said, I only have $3,000 of capital. Okay, is that okay? Absolutely. Anything over $2,000, like, listen, everybody has to start somewhere. You're going to do some one lot trades inside, go out and do a one lot. Do a one lot in here. Everybody, wants to, I think people come out and they like, oh, that guy was doing 100 contract trade. Okay. People don't survive that way. Be capped in one lot. It's fine. What's the difference? Whether you trade $3,000 or $3 million. And I'm serious. What's the difference? Who cares whether you do one lot or 100 lot? Get rid of the ego. Get rid of the ego. Trade one lot. Even if you have a $3 million account, you still have to learn this strategy. All right, so I want to wrap it up tonight. Again, go to theotrade.com/edge. I'm telling you, you guys are absolutely going to love what we do here at TheoTrade. I will be live tomorrow, 10 minutes before the open. I'm going to start at 9:20. Again, 9:20 Eastern Standard Time. If you guys are on the West Coast, 6:20 a.m. 6:20 a.m. we actually kick it off. I'll actually come live at that time. If you ever need to get a hold of me after this evening, just go to support@theotrade.com. I want to thank everybody for tuning in tonight. Have a great evening, everybody. Bye-bye.